Hi and welcome to the Market Alert for Monday, the 22nd of February 2021. So the House releases text of 1.9 trillion stimulus package, which includes $15 hourly minimum wage hike. So as it says here, wasn't that a non-starter? Well, we've been aware of this obviously for the last few weeks since Biden took office. And what's really interesting about this is that what he wants to print for has absolutely or almost nothing to do with the coronavirus at all. So again, they're just using this as a pretext in order to print and keep printing, and the money will find its way into the banks and into the markets, as it's done for the last 13 years. As Rubinho says, there are no tools left, and warns it's aristocrats versus we the people. When you bankrupt your country, your politics are inherently corrupted by that bankruptcy, and that is what is happening to us. And that's happening around the globe as the US dollar continues to move to the downside and devalues, and that's why Bitcoin is making new records, and the metals markets are currently holding as well, because the dollar is being devalued by this constant money printing. And of course, the yields are moving to the upside as well. Let me just wait till this refreshes and then go to year to date, and you'll see that from February that the yields have started to accelerate to the upside. This is not good news for a government that wants to keep printing money. However, if you go back to let's have a look at all, you'll see we're not anywhere near the 2008 highs, but that's a different ball game, because that was at 5%. There's absolutely no chance of the government allowing rates to go to that sort of level. It would well and truly bankrupt them. But back in 2018, the 10-year Treasury rate was 3.16. So we've got a bit to go on the upside. The problem is in January 18, they hadn't printed an extra 7 trillion like they did last year for the stimulus programs and all the rest of it during these last 12 months. So this is getting into a dangerous territory, anywhere near 2%, and there's going to be an issue here. Right, let's have a look at the news for this week. Whilst we're here, we'll have it all look here. I've taken out the low warning news because it's a distraction, and the main events are what you actually see here. We've got today we've only got the one news item, which is German business info, and that's a business climate. And then tomorrow I'm only looking for this sort of news here, where we've got Powell testifying, and then Wednesday Powell testifying. So let's see why he's out twice. Is this the Humphrey Hawking testimony that we see twice a year? Just have a look through that. No, this is in front of the Financial Service Committee, isn't it? Yeah, that's this one. But then there is the Humphrey Hawking one as well, where he's out for 2 days consecutive as well, 6 months apart. And then we've got a G20 meeting, no doubt by Zoom, on Friday and Saturday. So not a big news week this week, which is good, because the flash news on Friday was a pain in the rear, which we'll have a look at in just a moment. Meanwhile, on the implied volatility front, which I haven't added to the browser yet, so we can see that on Friday we saw this move slightly lower from the 1748 to the 716. But we're still green, but there is weakness around, as I mentioned in the headlines last week on the daily email. There is definitely weakness in the market, and I wouldn't be at all surprised if they don't try and force the market to the downside to speed up the 1.9 trillion and get it through. A joint effort by the Treasury with Yellen and also Congress to get a move on and get this money out to keep the market afloat. Simple as that. So let's have a look at where we stand overnight. We'll start with the Dow, and you can see there's some weakness here. We're starting to have a problem taking out the previous day's high, certainly on Friday, I know on Thursday of last week the Dow managed to get back above it, but it was slammed back down on Friday, and on overnight we're already below the 5-bar moving average once again, which we have been for the last 2 days as well. So there is definitely weakness around on the overnight of the Dow there. And the same in the DAX, this also struggling at the 62% retracement area, with prices moving back below the 5-bar already on the overnight. That's before the futures market opens. We're still finding support at the 20-bar moving average as well, which is a 78% retracement from this low to this high. So watch out if prices move lower at the 13,900 level. Keep an eye on that as well. So watch the upside. Prices move to the upside. Watch that 62%, and on the downside, watch the 13,900. And this is what it looks like overnight. Prices open for an hour, and then they close again, and then they open once more. And just find where we are. So prices gapped higher on some sort of positive news, traded down to the DP level, and then made its way back off the DP up to the high, and here it found resistance. If it's finding resistance at the previous day's high, there's definitely some weakness about. Prices trading down to the 200 MA, and then again you see the cluster of volume at the DP level. You can see how they come back in and buy the market at these levels. At the moment, the market's waiting for the futures to open, and again you can see prices sitting on the DP at the moment. Really powerful line in the sand, as it were. So keep an eye on this. If this is broken, of course, then we're going to move down. So again, let's just compress the chart a bit further. Any chance of breaking to the downside, we go down 100 points to the low and the S1 there, and on the same basis we head up this way if they want to bring the market back to the future. So there's a 100-point direction in either way there for prices once the futures open, and then of course the cash market. So that's where we are with these markets. The silver market, just have a quick look at this. They sent the market down overnight on Thursday night, and it was brought back immediately. This week is the final notice day and end of the March contract. This is where it gets really interesting with silver, and see if this can break to the upside this week and head back towards the recent high of just under $30. So did it get to $30? Yeah, it went to 30.21. So keep an eye on this. It is due for its move, and of course as we go into the summer you get the annual move as well of the silver price. So all positive for silver. And what's interesting, every time they've been slamming this, it's been more difficult to actually hold the price to the downside. But like I say, very important week. It's delivery week. Will there be enough physical silver to cover the COMEX contracts that are that take the option for delivery? Of course, the COMEX can actually pay cash as well, so they've got the get out of jail card as well. They can fill this trade, or instead of delivering, actually pay the cash. Okay, let's have a look and see what happened during Friday. There's not a lot to report here. As I mentioned in Friday's market alert, the flash news is an absolute pain in the proverbial, and this was no exception this month. And I'm just going to go forward on this because you can see that the market was just sideways, and it's stuck in a trading range, not even worth entertaining. And you'll see their prices, even though there was a signal to the downside, you had a buy signal that failed. And that's because the flash news at the moment is important for the market, which is why it was waiting to see overall where all of the Eurozone countries, Germany, France, UK, well, we're not in the European Union again as a full member, and then of course the Eurozone as a whole. And then prices just traded sideways, so not a lot there at all in the morning. And then in the afternoon, again, there was more activity in the mid-morning than there was during the official trading times. And again, in the afternoon was just desperate, as the market barely traded outside of a range once more, as you can see here. So again, I'm just going to fast forward through this. And with a bit of luck, now we've got this weakness in the background and the implied volatility starting to increase, we'll see a bit more of volatility and in one direction as well. Which, again, just to summarize why it's important to keep an eye on these fib levels, with teeth in, fib levels to the upside and to the downside there. Okay, that will do it for this one. If there is anything else to report, then I will let you know. But fingers crossed, the volatility and direction is far better than it was on Friday. And this is what normally happens before we see the market break. And fingers crossed it's to the downside to have that correction that is required. The market's seriously overvalued. So fingers crossed that's going to be the case. If not, then it's a classic one of holding prices to bring them back to the upside when the 1.9 trillion deal is done. Okay, as ever, thanks for watching. See you in the next one.